Hi everyone, this is Paul Lang with Disciplined Trading Strategies, and I am here to talk to you about the market. This is called a bookmark on the market part 2. The reason it's called part 2 is because there is a part 1. This is July 18, 2018, and this is looking at the big picture of the US stock market. I did a bookmark on the market part 1 back on January 30th. I call this a bookmark on the market because I wanted to freeze a moment in time and review what my comments have been so there's no question in the future. It is very common after major market moves that all of a sudden the great pundits are out there explaining how they were right in some abstract way or another. My first one was January 30th, and I highly suggest you watch it. I actually went to watch it, of course, before I did this one so I could remember what things I should talk about in this video, and actually I was kind of surprised, I guess I shouldn't have been, that it was a very, very informative video, and I suggest you watch it. There were a lot of good points in there. Whether you're watching this one on YouTube or the DTS site, if you look a couple of videos to the left, in this section, which should be miscellaneous videos, you should see part 1. Look it over because these are some of the things that I talked about that go beyond just the market comments. I talked about the 3 different market evaluation periods or time frames. I emphasized why we were not at the top in the market back then on the 30th, which we were not. At the time of this recording, we're going to new all-time highs in the QQQ. I reminded people that I am bearish by nature, so I agree with all of the wow, this market is insane comments, but nevertheless, we play what is happening. And even though I would prefer to be bearish, I follow the charts, and I have been bullish in the big picture for 9.5 years. I discussed the motives of hedge fund managers and analysts and why they say the market is or is not at a top. I discussed the need for all to have a plan and not be a deer in the headlights. If you mess up, it becomes exponentially harder to fix every day that goes by. And I discussed the ways a market could go from bullish to bearish and the general concepts of what to look for. There's actually 3 ways that a market can switch and some general comments about what to look for. And I also talked about the guy not to be. These are the outlook scales I showed back on January 30th. The bearish caution on the midterm was well founded. As of this writing, the QQQ just went to new all-time highs. The small caps did so a couple weeks ago, and the SPY is not far behind. The long-term remaining bullish was very justified. So in the long-term scale here, and these are the scales that I put in my DTS daily market letter that goes out every day, and also in the long-term trader letter that goes out periodically. This has been bullish always in the long-term outlook. It has never switched at any time during the last several months, or for that matter, in the last 9.5 years. The midterm outlook, of course, flips back and forth, and at the time that I did this, this was pointed toward bearish for the first time in a while, and I'll show you why on the charts coming up in just one second. This was the last bookmark on the video, and you can see the bearish midterm outlook was well founded as we fell for a couple of weeks right in here. This is a weekly chart of the QQQ. We fell for 2 weeks, and that was that very hard fall where people thought that that was the end of the stock market. We rallied back to make a new high. We came back and set a higher low, and now today we're here setting new highs in the QQQ. This is the SPY weekly chart, and it is a little different because although we're breaking across these recent highs, this high was not a new high, and the all-time high is way up here. If you go back and look at the QQQ, you'll see the difference. The QQQ is leading the way with a couple of higher highs and a new all-time high. You see the SPY is a little different, not significantly, and I said back in March that the QQQ would lead the way this time because the SPY did last time. That's nothing bearish about that. It's just a normal part of sector rotation. The QQQ or the SPY, neither one is more or less important. It's all looked at as the market as a whole to me. Here's the QQQ monthly chart, and you can see right here we're going to a new all-time high, cleaning up the pattern. They got a little sloppy through here. Go back and look from 2016 to 2018. That is what we call a power trend of just very, very steady, consistent moves higher. And then, of course, the power trend ended with that big green bar, which is the reason why I had the bearish midterm outlook back at the last bookmark on the market video. This was exactly when I did that, right at the top of that bar. That was the end of January right there. After we had the initial fall and rally back right in here, approaching the prior low, I went back to a midterm bullish. That was on March 26th in all the letters, midterm outlook sent to bullish, and it stayed there from right there, March 26th, all the way until June 14th. On June 14th, I was hearing all over and hearing from the pundits and hearing on the news that all of a sudden everybody thought the market's going higher. Well, that day I went bearish. Went bearish because I knew we were going to have some kind of pullback. I didn't know if we would come down to 164. I gave it a 50-50 shot that we either hold this 169 area or come to 164. As we held 169 and went sideways, there came a day where I said, okay, over the prior couple of days means we're back to a daily uptrend. I said that on July 5th, closing above 3, which on the chart that I referenced at the time was the high of the prior 4 or 5 days, means a presumptive resumption of the daily uptrend. And then on July 9th, we actually went back to a bullish midterm outlook. And naturally, as you can imagine, the midterm and long-term picture are not about to change right now as we not only go to new highs, but the action over the last 3 days confirmed and reconfirmed very bullish activity. Now, naturally, whatever happens from here is always hard to say. If you only listen to these videos that I put out, the Bookmark on the Market videos, which the last one was, what, 7 months ago? Naturally, things can change, and they can change fairly quickly. I'm not expecting that they will, but I could go to a bearish long-term bias in probably as quick as 3 weeks if I saw the right price action. I don't think that's likely to happen, but it could. So you have to remember, our job as market technicians is not to blindly predict the future going out years ahead of time, is to evaluate charts as they form. And at the moment, everything is bullish, and that will not change tomorrow, but it can change over a period of time. I do think that the market has a ways to go before it hits its real top. I said that before, and with the pause that we had in the sloppiness this last few months, if the market starts to grind higher again, it means that we'll only probably head higher because we're seeing the proof, the evidence that all the money that wants to come to the market is not there yet. Here's a few things I'd like you to remember. I naturally can't go into a full training session here, nor do I have the desire to, but here are some things that I find people constantly get wrong when I talk to them and when they ask how I'm able to understand the market so well. These are some things that I tell people that they have to let go of. Don't listen to news. The only value of all of news is when allegedly good news is bad news or allegedly bad news is good news. The only value to understanding news is to understand that concept. Trying to understand the value of news and what you think is good or bad never works, and it never will. The market could care less. It's about supply and demand. Don't worry about economic reports. They are never helpful. Economists admit they don't have a clue what's going on, number one. Number two, the economy does not drive the market. The market drives the economy. That's the truth if you look honestly backward at every correction, bear market, bull market that's occurred. And also the concept that the economy is going to change every Tuesday at 10:30 when some new numbers are released is actually insane, besides being not accurate. Don't worry about how crazy the market is. It is always crazy. Valuations are crazy, but if stocks go higher, you want to be long, not short. I am with you. I understand. I have said that I am bearish by nature. If you ever have a discussion about where the market should be going, higher or lower, the bear will always win the argument about where we should be going. The bear will also be going broke as we continue to go higher. It's not about what you think, what you can rationalize. It's about what's actually happening. This is the most important comment I can get across to you. All of these topics. I, long time ago, sold a business. I sold it for about a 5 PE. That's real life. If you're going to go down and buy the donut shop at the corner of the street and you're going to buy it from a guy, if you're going to pay him a 30 PE, it means that you'd be paying 30 times what that company makes. It means that it would take you 30 years of profits to get back your investment. Nobody in their right mind would do that. It's absolute insanity. So don't tell me about valuations mean the market has to come down. Valuations are insane at any number. It's a game. It's a video game. It's a money game. It's not about reality. So don't get hung up on what you think PE ratios are and all that good stuff. There are some good technical things that you can look at about when certain numbers make the market typically turn, etc. But don't use your common sense to try and say, gee, the market's overvalued now, time to get short. I know many people that wanted to be short 5 years ago, 6 years ago, because they felt the market couldn't go higher. It had tripled 5 years ago, and that was insanity. Yet look how much it's gone up since then. The greatest money is missed toward the end of every bull market. You may say, well, why care about all this? I'm just going to get out. Well, that's what a lot of people did 5, 6 years ago. Some people tried to short, and they gave back all the profits that they had. The biggest money is often missed toward the end of every bull market. Knowing when to get out is what is really critical. There's nothing to be afraid of if you have your exit plan, in place and you evaluate the situation all the time. It's not like you're absolutely positively stuck, or if you are stuck in some stocks, you have to take proactive measures to protect what you're stuck in long, because if you're in positions because of your work or because of IRAs, you have to take whatever measures you're going to, but you should take them at the appropriate time, not just blindly exit because you think things can't go higher. Wait until things don't go higher. Yes, the market will crash. I guarantee you the market will crash. You don't need to tune into anybody's super spectacular webinar or subscribe to any newsletter to have somebody tell you the market will crash. We know it will, and it will be big. It may happen next month, but that was the headline 8 years ago, that the market's going to crash. We need to wait until the events occur that make a market crash, and we're not there yet. Remember, concepts can change quickly. I could draw a chart pattern that could give me a bearish big picture in 2 to 3 weeks, but it's very unlikely that would happen. But remember to keep tuning in because things can change. The biggest fear for the long-term player is, and always is, that a big disaster that causes a huge sell-off in the market, one of those big where we gap down and just head lower, lower, lower for a period of time. We are at a level where we may not recover from that very quickly. In other words, we're not at a market top, but we're in an area where a sudden shocking event that could cause a market debacle could be more or less permanent, meaning last for several months. So we do have to be careful about that event, and that is always the long-term investor's worst fear, because it is unpredictable. There is no amount of technical analysis, or even if you like fundamental analysis, that could ever predict that. It just happens. So hopefully these comments are somewhat helpful to you. And if you are ever interested in talking to me about the market, please feel free to send me an email. I've offered to do trade evaluations for people who would like it. You can send me an email for that. I'm Paul at Disciplined Trading Strategies. And remember, there's a lot of free stuff you can get. If you're listening to this video, you probably are vaguely aware of it, but there's a page on the website called Free Stuff, where I have Trade of the Week videos, other videos like this, videos of my prior educational events. They're all free to anybody who wants to listen to them. Be sure to attend the Introduction to Mastering Technical Analysis class. It is the first half day of the seminar programs that I teach to people who pay for the seminar program, but I open it up to everybody because it's more or less basic stuff and it gives you a little indication of how I teach and what my thoughts are. If you're ready for your seminar program, let me know. We have made a commitment to try and get people to learn and understand this. And the seminar program at DTS allows you unlimited retakes because I feel they're absolutely necessary to sit through the seminars 3 to 4 times before you really fully understand them all. And there are many other benefits, including access to me to get you learning the material. So if you're interested, you can visit the website and click around and you'll get more information about all the specifics, or you can always email me as well. And if you're not, be sure to become a member at DTS. If you go to the webpage and somewhere in the middle you'll find a place to click. If you become a member of DTS, there's no cost, no obligation, no credit card, not even a name, just your email, and you will be on the member list where you will be invited to events. You'll get the DTS weekly market summary and a lot of other good benefits. So any questions, feel free to email me. This is Paul from Disciplined Trading Strategies. Good trading, everybody.